Okay, welcome back. The markets markets actually come up. So you look up and you look down, you look up again, and things have changed, right? That's the market for you. And as I was saying this yesterday, if you have a bullish view, bearish view intraday, most likely both views will be right several times in the day. But at the end of the day, not very much to show for it.
I think, Prashant, the market has a correlation with your neck movements. Would you want to try that? The minute you look up, look down, maybe the Nifty moves.
I'll backtest it. All right, the Nifty Bank, though, I think let's just have the Nifty Bank up. I think it's, doing better. It's in the green, but there has been significant recovery on both the Nifty and the Bank Nifty from the time that we saw that sell-off, the initial sell-off, which was worth 90 points. All of it has basically been recovered. Almost a copy of what we saw yesterday. Yesterday, we saw a decent, good open, which we did not have today, but then we got the same sell-off like yesterday right after open. And then, like what we're seeing, we have a 80-90 point recovery. So, I guess the next acts follow. Well, let's get some market trends going. Pramod Amthe is head of research at InCred Equities. He's joining us right now. Pramod, good to have you with us here. Good morning. Do you have coverage on the asset management space, Pramod, at InCred?
Yeah, we have AMC coverages. We cover all the three AMCs.
Oh, wonderful. And have you been able to assess what is the impact of the changes to debt mutual fund taxation for AMCs?
No, I think we are yet to come back on that. But I think structurally, if you look at the regulations have been pretty tough on the industry, right? So as a result of which, we are looking at companies which are gaining market share or where the valuation comforts are much more better. So we are more inclined towards the UTI and the Aditya Birla AMC as the ad ratings on those sectors.
Got that. So let's just kind of then put the spotlight on where do you find solid opportunities, right? Slightly overweight to the benchmark or slightly underweight to the benchmark, but real opportunities now after the correction we've seen, Pramod. Because that is what is relevant for our viewers. On an absolute basis, what do you think is the place to be in? Go on.
So if you look at, you're right, there has been a consolidation or a correction, and hence the valuation comfort for the broader indexes are coming through. In terms of just to draw your attention, we also recently hosted corporates where the comfort is coming through for us on our themes of housing and infra. Both these sectors continue to get the incremental data points support by both the government policy action in the budget or even the micro data points which are coming on these two sectors continue to favor. So as a strategy point of view, these two sectors we are clearly pushing through as thematic. And in terms of the sector-wise overweight, we are overweight on autos, cement, consumer electrical, defense, and the financial services and infra. So those are the large areas where we are more comfortable on overweight.
Okay, Pramod, hi, morning. So just a further question on financial services. There's so much going on, right? First of all, we're seeing all this selling because of over ownership. And the moment funds need to redeem, you end up selling banks by default. So what part of it would you put incremental money in? Private sector banks, PSU banks, or would you look at, let's say, life insurers where prices have been beaten down, or now asset managers because of the latest headache that they seem to be grappling with?
So we are definitely positive on the private banks. Axis Bank remains our preferred pick in the sector, followed by other private banks, ICICI and the HDFC. So other than that, if you look at insurance space, we are still cautious as even the recent regulations have not been so favorable for them. And as I said, AMCs, the regulations are still pretty stricter. So the broader trend in terms of credit growth continues to favor. Some of the private banks are still putting in place to gain the market share. So those are the two themes which will continue to play in the banking space to remain overweight on the space.
Okay, got that. I just want to quickly get your view on the life insurance space, if you have, because that's, it's been for the longest time since I started covering market. It's been referred to as the sunrise sector. Now we have so many of these companies listed, and for the last 3 or 4 years, it's been pretty tough. The industry was hoping for some relief to the budget changes which were proposed, but nothing has come. Any views at all here, Pramod?
No, I think structurally, see, this was supposed to happen, right? These are the tailwinds which were initially given for this sector to achieve the required penetrations. And now I think government is making the right moves in terms of raising the challenge for this sector. I think in the short term, there might be the correction, or the sales teams have to reorient themselves to come back and sell the hardcore insurance products, because easy selling seems to be done and behind us. And that's where there is some amount of deviation, or some winners will emerge versus the tailwind which people are expecting. So our preference is more on SBI Life over the others in the space.
All right, Pramod, thanks a lot for joining in and giving us your thoughts on various sectors, as well as asset allocation on the whole. Rather insightful. We will keep chatting with you. But let's move on to an individual stock which was in focus on our radar on account of a large trade, or rather a large order that it won. Sonata Software is the one. It signed its largest ever contract with a total contract value of $160 million with a US-based consumer retail company. The stock is lower today, but has been buzzing around on the back of